Good morning from London. I'm Anna Edwards alongside Guy Johnson and Tom Mackenzie. We're an hour away from the opening trade. Here's what you need to know. Donald Trump arrives in Milwaukee for the Republican National Congress amid heightened security after surviving an assassination attempt. President Biden calls for unity in a televised address. The dollar strengthens and Treasury futures fall as the shooting increases bets on Trump winning re-election in November. We bring you the market reaction as the Trump trade heats up. Plus, China's GDP expands at its slowest rate in 5 quarters, with pressure mounting on President Xi to boost support measures.
Let's check in on the markets then. The focus on the US 2-year right now, 445, a yield move of 6 basis points. There's the bear steepening trade that many are flagging in light of that attempted assassination of Donald Trump, the poll number jump that is expected as we lead up to November. European futures pointing lower by 0.6% after a decent week last week. Gains of around 2% for European stocks, but of course the narrative changes now. The FTSE 100 pointing lower by 24 points. Euro dollar with the dollar bid currently down 0.1%. The countdown to the opening trade starts right now.
Monday the 15th, welcome to the show. If you are expecting volatility this morning after this weekend's events, you may be mistaken. Financial markets largely becalmed, shrugging their shoulders at what took place in the United States. Clearly things have changed in the political realm, but for financial markets, it appears this is just more confirmation of the probability of Trump winning the election in November. Treasuries have just started trading. Japan has been closed, therefore we get the late open this morning. And we get a small reaction. 2 years, as Tom was pointing out, yields up a little bit this morning, but not by much, Anna. Politics has changed. But has the story really changed for the markets?
Yeah, absolutely. I mean, a little bit of steepening, as you referenced then, in bond markets, and it is possible to see a stronger dollar and to read all sorts into that. Let's backtrack just slightly and think about where this does take the US political story, because perhaps this asks more questions, really, than it answers in terms of US politics. Does this boost Trump? Does it? It certainly boosted his the betting odds have suggested he's got more chance of winning as a result of this. Does it make him a more sympathetic figure? What does it mean for Biden and the way he campaigns here? Does it mean he's less able to attack Trump, has to call more for unity? And, of course, where does it leave questions about his age? Interesting that former President Trump has already said this is going to impact what I say in Milwaukee. He's changing his speech. He talked to the Washington Examiner saying it was going to be all attacks on Biden, and now it is going to be all about unity. So maybe at least for a day, that's where we stand.
Yeah, we'll see if that holds, because both the political analysts that we've had on Bloomberg Daybreak have suggested that for now, at least, certainly this benefits Trump. But for now, we're still, of course, 4 months away from that election. The speech then from Trump is going to be really consequential in the Republican National Congress, and to what extent the cooler heads narrative prevails on both sides, or does that start to break down? But the positioning now towards a potential Trump victory in November is being seen, and as we were mentioning across the Treasury curve, I talked about the 2-year. That was an old price currently, and you reflected this, Guy. Yields up just 1 basis point on the 2-year. Bit more of a move at the back end. The 10-year currently up 4 basis points.
Does this change anything? Yes, in so many ways, but no in so many ways as well. Trump was the front runner. You talk to people in America, the assumption is, certainly amongst financial market participants, that he is going to succeed, that we are going to get Trump 2.0. That was priced in weeks ago. This is just going to only augment that trade in so many ways, but maybe just at the margin. Yeah,
it's really interesting how in 2024, so many times are we seeing politics come up against markets. And in some cases, markets are really responding. There was surprise around France and still a huge amount of uncertainty there. But certainly in the UK case, this was seen as, the UK political outcome was seen as it was coming for so long, and perhaps if Trump gets if there's a big lead up, and if the polls don't change, and if he is then victorious, then maybe markets take it in their stride in the same way that they have done in the UK, because it is surprises that the market doesn't like.
And it's the locking in, arguably, of the Trump vote. They come out to vote, so it's the participation of the Democratic voters in November that many are flagging as being key within these 5 or 6 swing states, and the independents as well as part of that mix. So you have, if you expect that Trump now has got locked in his votes, they'll be there, putting their ballots in the box, every single one of them the Democrats may be less willing to do that. And what happens in terms of that whole debate around Biden and whether or not he is still viable, does that come back?
Well, so I think that's the most interesting question this morning in so many ways, is not how this affects the Republican side of the story. It's how it affects the Democrats. Do the Democrats add to the chaos by pushing Biden aside at this point? Do they want to do that still? How does it change his narrative? How does he address this problem? I think it's the bigger question.
Yes, I do think it's very interesting when you look at short-term market reaction. It's possible to be very logical about where the betting odds are and therefore chances of a Trump presidency and looking at Trump's policies and all of that sort of stuff makes sense. At the same time, we've seen a shooting in modern-day US politics. It feels strange that that is going to be in any sense a risk-on event. It feels as if that is not something that US politics needs right now. So, yeah, we'll continue to explore what impact this has on the markets.
But US politics has been chaotic for so long now.
Is that no surprise?
Is this a surprise this morning? Clearly it is. Clearly the events of this weekend are hugely shocking. But after we saw the Capitol riots, after we've seen the polarization, the division in America becoming more and more pronounced, does this feel like a shock? I don't know. Let's talk about what else we know this morning. I want to come back to Burberry in just a moment. We've got it suspending its dividend, but let's talk about China, because in some ways those two stories are related.
China has political stability, of course, thanks to the essential one-party ruling of the Communist Party of China. But they will be thinking about this. So the plenum, which in shorthand is a once every 5-year event, takes place in Beijing amongst the top, most powerful 400 or so policymakers in Beijing, setting out policy for the years ahead, will be thinking and taking this into account now, the prospects of a Trump presidency and how to adjust policy there. The immediate concerns, of course, for China, the softness in the growth print that we got, 4.7% below the estimates, a reminder that the house prices continue to fall. That ties into retail sales. And we've seen the weakness there because you cannot revive consumer sentiment without really dealing with the real estate sector. Industrial production, fine. You can use the state, the power of the state, to easily leverage that high. And you've seen that come through in the data. Much more difficult when it comes to the consumer in China, which ties in to, of course, the housing prices that continue. Softer prices and the crisis. But certainly the politics of the US and Trump will be top of mind for many policymakers in Beijing right now.
It's fascinating, isn't it? Just the ripple effect, the impact that this is going to have here in Europe. It's going to be interesting to see what defence contractors do this morning. It's going to be interesting to see what the market reaction is. Does this confirm that Europe is going to need to spend more money? Think about how its politics evolves. But we've seen division here in Europe as well. In some ways, this fits, again, the narrative. But let's get back to the US politics story. Joining us now, senior Bloomberg writer Stephanie Baker. Stephanie, in so many ways, the financial markets are shrugging their shoulders this morning. You wonder whether that's the right reaction. How does this affect the journey to November? What happened this weekend?
I think it affects the campaign hugely in the near term. I think both sides are going to be forced to restrain their rhetoric. You've seen Biden obviously come out with a message of unity. I expect Trump will probably take the same tack at the Republican National Convention, which starts today. And I think his tone will really be incredibly important to watch. Does he really, restrain himself? Does he restrain his camp from making attacks on the Democrats? We already saw that some people in his camp are blaming Biden and his rhetoric for, fueling the kind of anger that led to this attempted assassination.
And we are setting up for the Congress, aren't we, in Milwaukee, Stephanie? And so we've got live pictures, I think, coming to us of the arena where that is going to take place and the setup for that. There we are. That'll be heaving with people later on, and that runs for a few days this week. You've talked about how this might change Trump's speech and the way that he addresses people, and he'll talk about unity. But yes, is this a short-term effect? Do we, it's difficult perhaps, but by November, are they back to criticising each other in the way that we've known?
I think, the gloves will come off in a few weeks when this dies down. I mean, you look at history. I was just looking at, the election of 1912 when Teddy Roosevelt, where there was an attempted assassination on him. Everyone thought that would mean he would win. In the end, he lost to Woodrow Wilson.
And people were making the opposite point about Reagan and saying the attempt on him in '81 did have an impact years later, it seemed, on his success, in the eyes of some. So it's possible to find all of these historical parallels.
I mean, I think the interesting issue is, does this change Trump in any way? I mean, it was remarkable how he reacted to that attempt. He got up. I mean, I think a lot of us would probably, suffer from PTSD from that and not be able to get up. Does this change the way he campaigns? Does it make him a little bit more restrained and almost presidential in a way that we haven't seen him?
Yeah, I mean, that political instinct, that gut political instinct, just so clearly on display. And that photo now that will become an icon, you would have thought, for years to come, one for the history books with the US flag, the stars and stripes in the background. Talk to us about what it means for the Biden candidacy, though. I mean, on one level, we'll talk about his age, but on one level, this neuters a key attack line of theirs, which is Trump is a threat to democracy. And how do you land that as an attack line going forward, given what's just happened? But in terms of his question marks about his age and whether or not he is replaced, where does that stand? Does that come back in the next few weeks, or is that sidelined now?
I was expecting it was sort of a 50-50, whether or not he might step aside, in the next week. Some people were thinking it might happen today. Clearly, that's off the table. In some respects, it's already running down the clock. We're losing time. I don't think he can do that in the near term. It looks the president needs to be able to reassure the American people of stability, et cetera. On the flip side, he looks so behind politically that perhaps eventually it will push calls for him to step aside because this seems to have strengthened Trump in the near term.
OK. Bloomberg's investigations reporter Stephanie Baker with important context on, of course, this essential story for us today, and you imagine at least for the rest of the week. Stephanie, thank you very much indeed. Coming up, do not miss our interview with Greg Swenson. He's the chairman of Republicans Overseas UK to discuss US politics and, of course, the Republican National Convention. That interview is coming up soon.
OK, so that'll be one to watch for sure. Here's what we are watching out for today. We've got some earnings out already this morning. We'll get to those shortly. We've got a King's Speech. This is things we're watching for this week, I should say. We've got a King's Speech taking place this week. So that's the new Labour Party government setting out some of its agenda. A stronger OBR and a national wealth fund, of course, well trailed, but some of the things we might hear more about. House of Lords reform as well in focus. And the ECB rate decision. That's going to be something that we will certainly watch out for today. Interesting that we're also going to be hearing from Jerome Powell. Coming up on Bloomberg TV, in fact, Fed Chair Jerome Powell speaks to Carlyle co-founder and peer-to-peer host David Rubenstein at the Economic Club of Washington. That kicks off at 5:30 p.m. London time. And it's interesting that we've got this immediate focus back on Fed policy for markets, as you say, Guy, who are asking questions / unmoved by what we've seen politically develop over the weekend in the United States. We spoke last week to Bank of America, and they were saying that the feedback they were getting from clients is it's too early to trade the election. We have plenty of Fed events, plenty of data points to come long before then.
Got earnings season as well.
Yeah.
Goldman Sachs out with numbers a little bit later on today. That's going to be a big factor for markets, particularly given the reaction we saw to JP Morgan on Friday. You've got that to think about this morning. What is Powell going to tell David? David's a master at asking the kind of the simple but straightforward question that always elicits such a fantastic response. And I wonder how Powell is going to respond today, given the data we've seen, the really mixed data in some ways, the CPI data in some ways confirming in some ways that the disinflation narrative is intact. But look at PPI on Friday. You look at the University of Michigan data. Yeah. How do you respond to the fact that the consumer believes that actually inflation is still tracking higher and remains sticky?
And how does the dovish bias, some see the dovish bias, of course, within J. Powell, respond to that, with the markets pricing in over 2 cuts right now, with the first one likely coming through in September. That is the market pricing at 60 basis points by the end of this year. Whether that adjusts on the back of this interview. Crucial interview, okay, as you said, from David Rubenstein later today. Here's what else you need to know this morning then. Israel says the Hamas commander behind the October attacks was probably killed in a targeted airstrike on Khan Yunis. However, Hamas maintains the military commander is still alive. The militant group has also denied freezing ceasefire negotiations. It says at least 90 people were killed and 300 injured in Saturday's strike. Switching focus now, and Bloomberg has learned that Alphabet is in talks to acquire cybersecurity startup Whiz. We're told the transaction could total as much as $23 billion, making it the Google parent company's largest acquisition to date. Last week, Alphabet reportedly shelved efforts to acquire customer relationship management firm HubSpot. Do I have to read the next one?
Yes, you do.
Yes.
Compulsory.
Spanish sports had a lot to celebrate on Sunday. The country's football team We have to give it to them, don't we, really? Defeated England 2-1 to capture a record 4th European Championship in Berlin. Spain were excellent. England's men's team were once again denied its first major trophy since the 1966 World Cup. Guy, Anna, I know, was focused on railways and pianos. You, though, feeling the pain this morning? Was it worth staying up for?
No, is the simple answer to that, but I did. I think I went to bed just as the game's coming to a conclusion with the second Spanish goal. I was at Wimbledon yesterday, saw Alcaraz win. I just absolutely...
You were there at the final?
Yeah, demolished Novak Djokovic, who didn't appear on form. It was a destruction.
Speedy, really.
Sorry?
It was pretty speedy for a Wimbledon final.
It was incredibly quick, but it allowed people to get home and watch the football, which may have been a mistake. He said he'd done his job. The Spanish team, the football team, definitely did their job. They looked like the better team. It pains me to say it,
yes,
but they looked quicker and nimbler.
I stayed up to watch.
Sidelined you so quickly, and you've got a bit of a nod to Spain and their sporting victories this weekend with the orange, I think.
Do you think that's... Yes, maybe that's it.
Very Dutch, I think.
Maybe that's it.
There's a mix of orange and red.
It's just a very good day to be Spanish, wasn't it? Let's just say that. Well done to Spain. What else is coming up in the programme?
Anna doesn't want to talk about sports. To be fair, I don't want to talk about sports anymore either. The Olympics are coming. That'll be the next big sporting event, which takes us in so many ways back to the politics as well, the divisions we're seeing in politics around the world. This week, of course, kicks off with an eye on how the dial may have moved for global politics and markets. The attempt on the life of Donald Trump over the weekend, once again bringing into sharp focus the division in America, but it's something that is represented around the world as well. We're discussing those connections throughout the show as well. How does it change? Does it change? Should it change how investors are thinking about the November election? I'm sure you have thoughts this morning on the sport, on the politics, on the markets. Join the debate. Join us around the table. IB Plus, BBTV Go is the function on your Bloomberg. I'll leave you with a live shot of the RNC. We're awaiting that event to kick off later. Will Donald Trump take a different tone after this weekend's events in Milwaukee? This is Bloomberg. Monday the 15th, good morning. Markets this morning trying to figure out what to do with what happened over the weekend in the United States. The attempted assassination of Donald Trump, obviously a huge story, but in some ways just confirmation for markets now that the expectation is that he is going to win the November election. So what really changes this morning? Judging by market reaction thus far, not very much. Treasuries are moving a little bit. The equity market is moving a little bit. Let's talk more about this and how we should be thinking about this. If you're a portfolio manager, what do? Frederick Repton, Senior Portfolio Manager with the Global Fixed Income and Currency Management teams at Neuberger Berman, joins us now on set. Shocking events, but markets shrugging their shoulders this morning. Is that the right reaction?
Yeah, so interesting. So first of all, let's start with the obvious, right? This has no place in politics or society in general. And it's good to see that all sides of the political spectrum has come out and condemned this action against President Trump. Now, going to markets, we were looking at Wellington Open, of course. The dollar rallied slightly, but it's paring back. So to your point, doesn't really look like there's much of a market reaction here. I think since the debate, market participants have attached a higher probability of Trump winning the election, and those type of associated trades are already starting to get positioned by market participants. So we're talking, the dollar has been weak because of obviously weakening U.S. data, right, which is partly why it rallied overnight. But also you're seeing the favorite trade probably on a Trump presidency, which is a curve steepener.
Yep.
Right. So since the end of June, let's say 530s have steepened roughly 20 basis points, which has been part of that. Of course, on Friday, we also had a big tail on the 30-year auction, which is quite significant. So you can see how market participants are a little bit more worried about the long end of the U.S. curve.
Is that the right reaction? Everybody seems very calm this morning. If we do get an expansionary Trump presidency, if we do get an inflationary Trump presidency, if we get a Trump presidency that puts tariffs on, that spends more and cuts taxes, do you think the long end is going to behave as that probability becomes greater and greater?
I mean, yeah, we do still think that there will be some weakness in the long end, right? To your point, of course, there's a lot of cross currents and a lot of things, mind you, that can happen. Already in July, there's, of course, a lot of risk events. And so it's by no means guaranteed, but it looks like we're going to see more term premium in markets going forward. I think the one caveat to that is, of course, one of the policies of Trump is to increase production of oil, right? What is that going to do to the oil price? I don't think market participants are thinking about that yet. It's more about tariffs. It's more about continuing to do deregulation, tax cuts, continuing to run a pretty large fiscal deficit. But oil prices is, of course, one of the interesting aspects here.
And Frederick, how do you think about what all of that means for the Fed? So if you do make assumptions around a Trump presidency 2.0, you can draw conclusions like you just mentioned there about what it does to bond markets, about fiscal deficits and the like. And if that is inflationary, you know, maybe you have medium-term expectations about where the Fed then goes, how many cuts we can have. What about very near-term expectations? I was reading somebody at Talbach and Capital Advisors saying this morning that this actually changes their thinking for September. What impact does all of this have on the Fed?
It's hard, I think, to discount political events before they have happened, right? Maybe we look at Bank of England as a good example. They even created a blackout period and didn't take any action in that period, right? And so it's hard to see that it's going to change, I think, the calculus, right? The inflation number that we had last week showed further progress. We see that the labor market is weakening. The economy is weakening quite broadly, right? We're not talking about recession. We're talking about the so-called soft landing, right? That's where we're heading. And so for the Fed, right, and also you look at what's Jackson Hole going to be, effectiveness of monetary policy and transmission. These are key aspects. And so in our view, the Fed is going to use the July meeting to line up a more thorough discussion in Jackson Hole and then start cutting in September. And if they do have that soft landing, right, it gives also the new administration more space to do some of the policy measures.
What's the biggest risk to that September call then? Is it that inflation stays stickier, services and other parts of the inflation spectrum stay stickier, or is it that growth holds up, or actually is the growth path not important because it's actually about inflation normalization?
Well, in our view, the inflation dynamics are edging towards softer inflation in general, right? You can see it in OER. This has really been the sticking component of inflation. It's been coming down. It's printed one of the lowest prints of the last few years. That's important, right? That is further progress. And then you look into the guts of the report. There's a lot of items that are showing disinflation here. And it's really been shelter that's been boosting U.S. inflation. If that is coming down, and you can look at some forward-looking indicators about rents and so forth, right? Things are moderating, and then it's time to remove some restriction from the Fed.
Frederick, in terms of the medium-term view on the greenback and the dollar and which force comes to play in a more pronounced way, concerns about a blowing out of the deficit in the US if you get a Trump presidency in November with tax cuts and other policy measures there versus high yields at the back end of the Treasury curve being supportive for the greenback. Where does that concerns about the blowout deficit arguably is a call to take your money out of the dollar, concerns about the dollar as a currency longer term? How do you parallel those two competing pressures medium term?
It's a very good point, and I think market participants have been struggling with this year to date. If you look at, we look at euro dollar as a proxy for what's going on in foreign exchange. We've been in a very dull range, right? 110, 106 for the whole year, right? Because market participants, number one, there's been very high cross correlation with interest rates across major economies. So that doesn't argue for a lot of FX volatility. But also I think market participants are grappling with these issues. But if you take a step back and you look at the longer term, right, in order to sell the dollar, you need to buy something. And so then you need a strong Chinese economy. I heard here earlier you were talking about the weak growth in China. You need a strong Europe. And if you're looking for a Trump administration that may put tariffs on Europe, it's going to be tough.
Frederick Repton, thank you very much indeed. Run short of time. Senior Portfolio Manager at Neuberger Berman. Plenty more coming up, of course, on the politics of the US and the market implications. This is Bloomberg.
This event has sort of restated or reshaped the baseline of the campaign. Trump looks a lot stronger. It's not that we're going to see a massive bump in the polls for him. This election was always going to be close. It will remain close. But the issue now, or the thing now, is that Trump's base of support is solidified. it'll be much harder for him to lose ground, and by exchange, it'll be much harder for President Biden to make up ground.
It is going to cause the Republican National Convention to have a more conciliatory tone, to have a more patriotic and hopeful tone this week in order to bring that temperature down.
Beijing has been tilting its assessment in favor of Trump winning the presidency. I think they're likely listening to the discourse coming out of the United States over the past 24, 48 hours, and I think we all seem to think this further moves the needle in Trump's favor.
Donald Trump then being referenced a lot there after the weekend's events. He's arrived in Milwaukee for the Republican National Convention after he was targeted in an assassination attempt at a campaign rally on Saturday. Joining us now with analysis of where this takes the campaign, Greg Swenson, chairman of Republicans Overseas UK and founding partner of merchant banking firm Brigg McAdam. He actually joins us from Milwaukee. So, Greg, thank you so much for being with us. I know you're usually based then, as Republicans Overseas UK would suggest, in the UK, but over in Milwaukee for the RNC. So thank you very much for being with us. We've heard a little bit from Trump since the events of Saturday about how he's doing, but also about where this takes his campaigning. And he has said that he will use his speech at the RNC to call for unity. I wonder how long you think that will be in Trump's interests to push that kind of message to Republicans.
Yeah, great question. I mean, I don't know how long it will last. I hope it lasts right through Election Day and through his next term. But I think it will last at least for a few months. And look, the Trump campaign has been so much more disciplined, and President Trump himself has been so much more disciplined in this cycle versus 2020 and even versus 2016. So if that's the message that we're getting, which it is from the campaign, from President Trump, then I would expect that they will stick to it. I think the only major change could be if President Biden, reverts back to the mean or reverts back to his sort of angry, what Trump is bad campaign, as opposed to what the President Biden has been saying in the last 24 hours that he wants to sort of dial down the rhetoric. So I think we're hearing the right things from both candidates. That's a good thing. I think it makes the campaign better if we could focus on issues and outcomes and decision making. I think the Republicans are in good shape.
Where do you think that move to be more disciplined, Greg, comes from the Trump campaign? Because some have suggested that that's been the case, in particular in the last couple of weeks, since President Biden has started to perform so badly in debates, and his poll ratings have reflected that the Republicans have just thought they can sit back and watch what the Democrats are sort of doing to themselves. Would that be your analysis?
I think there's two things. One is, as you point out, that they can do nothing. They can sit back and watch the self-destruction of the Biden campaign. That's Napoleon has always said. Napoleon used to say, never make a mistake. I mean, if your enemy's making a mistake, don't do anything, right? In a sense. And so, but the other thing is, I think that there's just a different group running the campaign. Susie is much more disciplined this time around, or at least has more management and more control over the campaign. So I think that you'll see, that there's really two reasons. One is, as you pointed out, after the debate, it was best just to sit back. The format of the debate was actually favoring President Trump. Even though the format came from the Biden camp and from perhaps President Biden himself, the idea that there was a mute button and it you couldn't interrupt, that actually favored President Trump. It made him look more disciplined and controlled. But that's been the case in the campaign over the last year.
Greg, it's worth putting in context as well that President Trump, as president, as candidate, has lent into kind of violent rhetoric as well, talking about roughing up protesters, talking about retribution, mocking Paul Pelosi after a brutal hammer attack. So that is important context as well. Where does it leave us in terms of fundraising for this Republican Party and the infrastructure around Trump? Where do you see that? How do you see that story evolving?
Yeah, it probably gets better. I would imagine a surge in fundraising after Saturday. Whether that's sustainable or not, I don't know. But you saw the similar surge after any time he goes through some difficulty. You saw a massive surge after the verdict on May 30th. You saw a big surge after the mugshot last summer. So these things typically help President Trump. I think that the fundraising has been very successful. The Democrats have a fundraising advantage in general, and I would have expected a massive fundraising advantage for Biden over President Trump, even after the great Mar-a-Lago or the great Palm Beach fundraiser where Trump raised $50 million. That was kind of a one-off. We had a fundraiser in London for President Trump, raised a few $1 million, which is big for an outside the U.S. It's probably the record for an ex-U.S. event. But that's not sustainable compared to what President Biden could be expected. Now, that was all prior to the debate and prior to some of his big donors suggesting that they're going to cut back or even stop. You saw the $90 million number a few days ago. You saw George Clooney, who, I always try to remind people, he's not just a Hollywood celebrity. He's not just a movie star. He is a massive donor and massive fundraiser. He had an event in L.A. for President Biden a few weeks ago, and raised $30 million. So this is a big change in the campaign. President Biden's numbers are plummeting in terms of fundraising. President Trump's have done very well compared to expectations. And I believe that will continue, especially after Saturday.
What do you say when you sit here in London? You're, of course, in Milwaukee, and we appreciate you taking the time. But when you're in London, what do you say to those with that international concern? We know it's widespread about a Trump presidency, a Trump 2.0,
sure,
particularly coming from a president who was unwilling to accept the democratic will of the people of the U.S., tried to overturn an election. How do you respond to that deep-seated international concern?
Yeah, I mean, look, there are some valid concerns. I know the earlier guest was talking about tariffs and trade, and I would hope that President Trump this time around keeps the tariffs focused on trading partners who aren't necessarily playing by the rules, or at least playing fairly, such as China, which is the most obvious, and rather than tariffs on our allies and our traditional trading partners. So I think if he wants free and fair trade, we can get free and fair trade, but let's not overdo it with tariffs, obviously. That's one big risk. But I think a lot of the other risks are overblown. You talked about, first of all, NATO is typically at the top of the conversation in the UK and in Europe. But, look at what's happened lately. You have 23 countries that have reached their 2% of GDP commitment. It was 4 back in 2014. I believe it was 7 or so when President Trump took office in 2017. And so, his rhetoric, while sometimes clumsy, is actually better for NATO in general. And again, I know he overdoes it with the rhetoric occasionally. That's his way of communicating and his way of getting NATO to change. Now, my biggest concern with NATO still is that the big economies, Germany, France, Spain, are not meeting the 2%. Of course, the UK is, they always have, around 2.5%. But the biggest risk, and this is where I think the voters and audience in the UK and Europe do not understand this, is President Biden has cut defense spending 3% in real terms 3 years in a row. That's 9% of U.S. defense spending, again, in real terms. The U.S. is still half of NATO. Now, President Trump, when he was in office, increased military spending, defense spending. He tried to make the military stronger, whether you agree with that or not. But I think in Europe, it should be very important for NATO and Europe in general to have a strong U.S. defense when it's still half of NATO defense spending. So essentially, we've had a 4.5% cut of NATO spending total in 3 years. That should worry the Europeans. So I think they're not used to, still, even after 8 years, Europeans, especially, and also in the UK, are just not comfortable with the way President Trump speaks, but they should be very comfortable with the way he acts and the way what he's done for defense and what he's done for economic growth. So I think, that as our trading partners, you want a strong U.S. GDP growth. You want strong America in terms of security.
Yep. Greg, final quick question from me. Nikki Haley's going to be speaking. How significant is that? What role do you think she's going to be playing? And after this weekend, the nomination for the vice president feels even more significant. Who do you think it's going to be?
Yeah, tough one on the latter question. It's really the inner circle, the short list changes all the time. You know, you've heard in the last few days a lot of J.D. Vance talk. I don't know that would be my call, because I think he's in the same lane as President Trump. He's got the same appeal to the similar voters, you know, the traditional President Trump base, for sure. And then to your question about Nikki Haley, you know, she's a completely different lane. So I think the fact that she's speaking is great news for the convention. There was concern over the last 6 months in the conservative media in the U.S. specifically that the party wasn't united. You still had that 20% of Nikki Haley voters that were still voting for her in the late primaries, and we were afraid that, you know, we wouldn't get them back into the party, get that party unity. I think with Nikki Haley speaking at the convention, it's really going to help.
Yep.
It might not get 100% of Republicans on board, but if you get back to 90, then that's fantastic. So Ron DeSantis is also joining in. So you have the two major competitors in the nomination process with President Trump speaking at the convention. So I think that's great news for unity.
Great. Thanks for taking the time. Really appreciate it. I hope the body clock's still on London time. This doesn't feel too early in the morning in
Milwaukee.
Get there. Greg Swenson, Chairman of Republicans Overseas UK, joining us from Milwaukee. Coming up next, we're going to change the subject. We're going to talk about what stocks you need to be watching into the open this morning. Luxury, absolutely front and centre. We've got Swatch on the move this morning after missing numbers. Burberry has changed its CEO, suspended its dividend. We'll see how that stock reacts at the get-go of trade this morning as well. That's all coming. The market open is around 17 minutes away. This is Bloomberg.
Welcome back. We are 15 minutes away from the opening trade this Monday. European stocks pointing lower by 0.6%. We focus right now on the data that's come through from the world's second largest economy, China, of course, where GDP growth weakened more than expected to 4.7% in the second quarter, falling short of expectations. Let's bring in Bloomberg's Jill Desis for the analysis. Jill, what for you were the key takeaways? We didn't just get GDP, we got industrial production, we got retail sales, we got housing data as well. Where does this leave us? What stood out to you?
Yes, Tom, I think really those retail sales figures were a pretty major concern out of this data today. As you said, 4.7% growth in the second quarter, actually the weakest growth for China in about 5 quarters, largely driven by these really poor numbers in retail sales. That 2% uptick really missed, I think, most, if not all, estimates that economists were really looking at here. So while you did continue to see a further uptick in industrial production, those numbers being as weak as they were show us that there continues to be that big divide between how the economy is doing when it's, in terms of, exports really doing quite well, but ultimately domestic demand continues to struggle, and it doesn't really seem like China's in any place to, do things such as cut policy rates or anything else that might help the economy in the near term, at least for now.
Jill, it feels more likely that we are going to see Trump 2.0 this Monday morning after this weekend's events. Does that make it less likely, increasingly less likely, that China will be able to export its way to a recovery?
Yes, Guy, I think that's certainly a pretty major concern that China has right now. I mean, ultimately, as we've been saying, exports have really, external demand has really driven a lot of China's recovery this year. It's been a really, really key pillar of growth for China. But as we have seen, it's not just the U.S., but also many of its European allies that have instituted more trade barriers on China. We're expecting, I think, another round of tariffs to come into effect sometime in August. You've had, obviously all of the electric vehicle barriers that have been put up by the EU, some additional tensions there. So as we get in through the rest of the year, and yes, this seemingly increasing likelihood that we may be positioned for another Trump administration that does call to question whether there would be additional measures, additional tariffs on various Chinese goods that would come into effect under a second Trump administration. But even absent of that, the Biden administration has actually been quite strong against China on certain elements, particularly semiconductors, that kind of thing. So it does seem like there's a pretty concerted general push against those types of issues right now.
And give us the policy-making response then, Jill, to the weakness that we've seen in the Chinese data. As often, when we see the data weakness, people start to conclude, well, the Chinese leadership will have to do something, and they have a perfect forum to do that, should they wish to, with the third plenum taking place this week.
Well, it seems as of right now like there's not any kind of dramatic moves that may be coming down the pipeline. I mean, the central bank did have an opportunity a bit earlier this morning to try to cut policy rates. They declined to do that. So it does seem like they're at least willing to stand pat there. Of course, there are some concerns there to sort of grapple with as they consider when they might have some runway to adjust rates in the future. But yes, so otherwise we've got this big major political gathering here in China this week, the third plenum. But, you know, it seems more likely that what we're going to get out of that is more sort of long-term efforts at reform, maybe some fiscal reform efforts that come into play. I'm not really sure that the expectation there is for anything that's going to dramatically move the needle in the short term, nor does China, I think, really want to project this idea that you could change major, you know, long-term policies on a whim. So we'll have to see what they end up doing, you know, in the coming weeks or months. But I'm not sure that the third plenum is going to be the most appropriate place for China to suddenly whip out something that really turns things around when it comes to the economy right now.
Jill, thank you very much. Bloomberg's Jill Desis joining us there with the latest on that China news flow around the data and what to expect from that gathering of the Chinese political elite. Let's get to the markets conversation. We'll talk about the markets in 3 minutes. Paul Dobson joins us, Bloomberg's executive editor for Asia markets, but he's in London this week, and we appreciate his time. Paul, thank you so much for being with us. The perfect person then to ask about the Trump impact on markets, the extent to which we're seeing it. I mean, we see a bit of strength in the dollar. We see a bit of steepening in the curve. We see US futures stocks actually up quite substantially. What do you make of the scale of the response we're seeing here?
Yeah, well, it's a moderate scale of response, but I think all going in the kind of predictable direction. Like you said, some of the big movers would be stronger dollar and lower treasuries. We've got Bitcoin, which is on a bit of a tear as well. Trump seen as pro-crypto. I think the yield curve is the place to really focus your expectations, because if you think over the last couple of weeks, the narrative has been that the Fed is getting closer to being able to cut interest rates. We've seen those September bets come back into the market, pushing down the low short end of the yield curve. But at the same time, if you think that Trump is inflationary, if he's going to be spending more, if he's going to be increasing the supply of treasuries in the market, then that's going to weigh particularly on the long-term yield. So that pivot between sort of the short end and the back end seems to be where people are expressing it. You know, we're minus 20 basis points, I think, now on 2s, 10s, the highest in several months, and that continues to kind of push in that direction. So maybe that's where people are looking for the easiest way to tease out all of the different narratives there.
Yeah, and it's interesting to see the yield moves across the curve. I mean, they're not that pronounced, but you see how it differentiates between the 2, the 5, and all the way down to the 30, where yields are higher at 4 basis points. Tie that into the dollar then, because the Bloomberg Dollar Index, the dollar is bid today up 0.2%. Is that a risk haven move, a safety move, a hedging move, or is that a move more linked to what we're seeing in terms of yields and treasuries?
No, I think more yields and treasuries, and in general, basically, you know, to step back a little bit, the shooting obviously has been interpreted, but my wife told me about it. The first thing I thought is that's just going to increase his chances of victory then, because, you know, then the fist in the air and all of that, quite powerful images as well. Trump policy should be favourable for the dollar, not least because they push up Treasury yields, but also if he's imposing greater sanctions on the rest of the world, then that will also weigh down the currencies of competing nations and therefore lift the dollar, which is why you see the Mexican peso under threat as usual, but also those Asian currencies coming under the cosh a little bit in trading today, I think.
What has the bigger effect this week? What happened over this weekend politically? What Jay Powell says to David Rubenstein tonight? Or what Goldman Sachs reports in the earnings season more broadly? Kind of which of those 3 factors do you think actually has the greatest potential to produce more volatility?
Don't think any of them necessarily would be that much in conflict with one another, though. They all seem pretty equities bullish, right? Depending on what we get from the earnings. But if you're looking at steeper yield curve, that speaks to, you know, bank equities performing strongly. If you're thinking about a more stimulative approach from a Trump success story, then that's going to support equities as well. If you're thinking about Powell, he's probably happy with the way the markets are priced, the more supportive Fed. Also good for equities. So from that perspective, at least, maybe that's actually a place where people can be pretty ambitious and optimistic when they're putting their bets going into the week ahead.
Paul, very nice to see you in London. Always a great pleasure. Paul Dobson, Bloomberg Executive Editor for Asia Markets. Thank you very much indeed. We talked about the earnings season there, and we probably need to talk about some of the stocks that maybe we need to be thinking about as we approach this Monday session. Look, we can talk about the defence stock story. I think that could be an area that maybe you want to watch out for. They've done very well this year. Does a Trump presidency encourage Europe to spend more on its own defence? I guess is the question that we should be asking there.
Last week we talked a lot about Rheinmetall, didn't we? And that unfortunate story around the CEO.
Yeah.
But they were in focus there. But yes, obviously Trump read across into defence stocks. Also Trump read across into healthcare stocks then. And obviously we watch the big US names. And if the Republicans are going to be a little happier to spend money on drugs, then you'd look at likes of Novo Nordisk as well.
So for a number of sectors, the focus is on the regulation and the impulse around regulation coming through from a potential Trump administration, in which, of course, healthcare firmly sits on the question of regulation. So the expectation that maybe this would be an administration that would go less heavy in terms of regulation, so maybe healthcare would get a lift as a sector on the back of that potential Trump
Burberry
victory.
also in focus this morning, cutting their dividend, so no dividend, and the CEO out after just 2.5 years. They've been trying to move up the luxury curve. That's not been working, it seems, and that stock is expected to go quite a bit lower at the open, as will the share price of Swatch.
So both in some ways, the story that connects them in some ways is what is happening with China. Swatch is mentioning this specifically in terms of its numbers this morning and the miss that it's delivered. China, the consumer there, Tom was referencing this earlier, that is where the problem seems to lie, and that's been priced to European stocks this morning via the luxury sector. The market open is coming up. We'll walk you through all of the details. This is Bloomberg. Monday the 15th, good morning. 2 minutes to go until the opening trade. Let's talk about where Friday's session is going to impact Monday's session. The blue line, European equity session. The white line, US equity session. As you can see, we finished higher than the US did. We got a fade in the afternoon. That's got to be priced in first thing this Monday morning. And that's why it looks like we are going to see, Tom, European equities may be opening a little bit softer this morning.
Yeah, the China data as well looking soggy. That has implications, of course, from everything from the luxury makers to the auto sector. And we have that story reflected in terms of what's happening with luxury in terms of Burberry and Swatch. We'll break that story down for you on a stock-by-stock basis. But currently, across the futures then, you're looking at losses here in Europe of 0.7%. FTSE 100 futures with, of course, the Burberry component at play here, currently pointing down by 47 points. And over in France, the CAC 40, of course, with that heavy tilt as well to luxury, pointing lower by 0.7%. So China data and, of course, that continued focus on a bit of a rotation around the Trump trade, given that assassination attempt, all in focus for us today. But broadly, you're looking at a down session so far, according to these futures, Anna.
Yeah, absolutely. So those are the sort of big macro themes that might drive stocks lower here in Europe, and the US session of Friday, of course. Guy, just a quick mention of some of the stocks we're watching. Burberry, we've talked about that stock, no dividend then, the CEO out after 2.5 years. A big story there. We'll look for substantial weakness in the share price of Burberry. Swatch in focus, a big miss on that Chinese data. And, of course, we'll keep an eye on any read across from the Trump story over the weekend into Europe. We will continue to do that when we go into the United States as well, from defence to financials to crypto to gun stocks and healthcare.
Absolutely. Here we go. The opening trade almost upon us this Monday morning. We've got a lot to think about. What's happening with Trump, what's happening with luxury, what's happening with China. Here we go. Opening trade. It looks like we are going to see probably a negative open at the get-go here in Europe this morning. That is what you're already seeing. As you can see, red on the screen. The FTSE 100 expected to open down by maybe 0.6%. We're already ticking towards that. The CAC 40, I think, is probably the most interesting trade this morning. How does the luxury story get priced in? That is where you may see the biggest effect, despite the fact that actually the two stocks in focus are Swiss and UK stocks with Swatch and Burberry. But nevertheless, the epicenter of the luxury story in Europe is the CAC 40. So the CAC 40 opening down by, as you can see, 0.5%. That feels like it maybe is the luxury trade. Elsewhere, we're down by 0.3%. But as Tom and Anna have both been pointing out, China a factor this morning, the Trump trade a factor this morning. All of that needs to be priced in. Plus, we've got to close the gap with the United States in the Friday session, Anna.
Yeah, absolutely. And all of those things add up to all sectors in Europe in negative territory. So we have everything from healthcare, which is the most resilient, down to consumer products and services. And a deeper dive into consumer products and services tells us where that weakness in Paris is certainly coming from. You're right, Guy, very much about the luxury space. And Caring down by 4%, just over 4%. So read across, of course, from Burberry and the difficulties they're having in turning their business around over in China. That has the potential to ripple through then, Tom, the whole luxury sector. Because we certainly saw in those China retail sales data nothing positive, really, about the Chinese retail experience.
70% of household income in China is linked to real estate and property prices just continue to fall in the Chinese market. The attempts in May to push through a significant package to support the real estate sector has yet to be effective. Big, important meeting politically, of course, in China this week, so we keep across that in terms of any policy that comes through. I'm not seeing a print, guys, yet on Burberry. Correct me if I'm wrong, and if you'll say anything, but Burberry, of course, in terms of suspending the yield, the dividend, I should say, and then the change at the top of that company as they try and attempt to restructure and readjust to that weaker demand out of China is quite pronounced. Also looking at healthcare, Anna, you touched on this, one of the more resilient sectors, even as you see a little bit of pressure coming down. It's currently flat, so it's at the top of the list. Hasn't turned green yet. Maybe it will do, but it's facing the least pressure so far in the session. And we talked about the fact that maybe there's an expectation that if you get a Trump presidency in November, they will go with a lighter touch in terms of regulation.
Other luxury stocks joining Caring then in negative territory. Still, as you say, Tom, don't have an opening price on Burberry or on Swatch. Both of those could move to the downside. But we see Richemont down by 2.3%, Moncler down by 2%, LVMH down by 1.6%, Hermes 1.4% weaker. So some read across to varying degrees, it would seem, from that Burberry story.
I'm trying to figure out why Ocado is down by as much as it is. Ocado's been halted this morning, limit down, halted for volatility. We'll figure that one out and come back to you, give you an idea of what is happening there. But, yeah, the luxury story, the China story, absolutely front and centre in European markets this morning, which in some ways is not what you'd have expected first thing this morning, when we would have thought that actually the biggest story in financial markets this morning would have been the attempted assassination of Donald Trump over this weekend. But markets in some ways shrugging their shoulders. This is just confirmation, maybe. Confirmation is the wrong way of putting it. This just keeps the story, the narrative alive that Trump is in front, and this is only going to push that further forward. So Donald Trump now arriving in Milwaukee. He's got the Republican National Convention a little bit later on. Heightened security, obviously, after what we saw this weekend, and that an attempted assassination of the former president, potentially future president in the United States. Let's get more on how we should be thinking about this Monday morning. Bloomberg's Brussels bureau chief, Kevin Whitelaw, joins us. Kevin, the financial markets are looking at this and saying, this just confirms what we already knew. We knew that Donald Trump was in front. This is only going to push his candidacy further forward. How do you think European governments are looking at the changed political narrative this morning?
Well, you know, I think for a lot of folks in Europe, it's another sign and another sort of ugly reminder of what the polarization in politics on both sides of the Atlantic is doing, and the rhetoric's being is heated up. The tension. I mean, we had an attempted assassination in Slovakia back in May of the prime minister. So I think that particularly for far-right leaders in Europe, but frankly, all of the European leaders are sitting here saying this is. This could have happened here, and I think it's just that sort of worrying sign that with the way social media drives some of these, sort of more extreme narratives, the way things get repeated, the way messages are hammered in over and over and over, it really has people worried about what is happening overall to Western democracies and just the kinds of political debates that used to happen, in theory with less violence.
OK, Bloomberg's Brussels bureau chief Kevin Whitelaw on the context around this attempted assassination, of course, with the international perspective as well. Kevin, thank you. Briefly checking back on these markets then, as you're seeing, again, the losses most pronounced around luxury. Across the benchmark, European stock 600 currently down 0.6%. In France, the CAC 40 off by 0.7%, a drop of 56 points right now. You have the likes of Caring down as I'm looking at it, down close to 4%. Let's get a call on these markets then with, of course, the US politics and the momentous events of the weekend tying in to that view, and bringing in Eleanor Taylor-Jollin, fund manager and co-head of Swiss and global equity at Union Bancaire Privée. Eleanor, thank you for joining us this morning. We're seeing a little bit of movement in the Treasury markets. Yields up modestly towards the back end. The dollar is bid, up around 0.2% on the Bloomberg Dollar Index. Have you made any adjustments? Would you make any adjustments on the back of the events that we saw over in the US, Pennsylvania, over this weekend?
I think your previous interviewee resumed the situation extremely well, that what happened over the weekend probably confirmed what the markets have been pricing for some time in terms of the US election. And as regards what is happening in Europe this morning, what I find is much more interesting is perhaps that we are being fundamental here on equity markets and looking at the situation in China and looking at the GDP numbers in China. GDP is what influences equity markets, not a political situation. And that is where you're seeing indeed that big hit to luxury, both obviously reinforced by the poor numbers published today by Swatch and by Burberry, but also just a reminder that there is just less disposable income around, it would appear, in China, and what disposable income is there is not being moved towards luxury. This was very much what our thinking was indeed earlier on this year, and we have been cautious on that sector during the year, as we expected that the high base that we would have in the second half of the year would be very difficult for luxury companies. So as fundamental investors, we look at what companies can do in terms of what the economic environment is. And we remember, obviously, that equity markets and the economy in general always likes to have a very stable background politically. They do not like it when the electorate is angry with the people they've chosen to represent them. They do not like violent language. They do like sensible, thoughtful approaches by politicians. And let's hope that the tragic events of this weekend will encourage politicians again towards a more sensible way of expressing themselves.
OK, on the market need for political stability and, of course, the focus on fundamentals. And you talk about the luxury space, Eleanor, and we'll mark right now Burberry down close to 10%, down 9.4%, suspending the dividend, of course, and change at the top in terms of a new CEO in a company that has, of course, struggled to adapt to the slower sales out of China. You talk about your caution when it comes to European luxury. Eleanor, what would you need to see to turn more bullish on that European luxury space?
I think we'd first of all need to see a more resilient Chinese consumer for luxury. Remember that luxury has benefited from a new consumer coming out of mainland China over the last decades, one could almost say. And that tide has turned. I'm also somewhat cautious about whether tourism, international tourism in China is going to pick up in the way that it used to pick up in the past, and also be turned towards that hardware purchasing when Chinese people travel abroad, or whether they may be moving more towards an experiential experience seeking when they travel, as opposed to simply consuming on goods. So these are areas where there's just a shift demographically, which comes with the development of a country. And also perhaps we need to look at whether the luxury good companies themselves are really necessarily offering the kind of value for money that the consumer wishes to have. Are they sufficiently innovative? Are they sufficiently offering something which justifies the big price increases which have been put through in some areas of luxury over the last few years? Luxury is no different from any other company. You need to treat your customer with respect, and that means that you need to price your products at a level where the consumer feels comfortable purchasing your product.
Eleanor, where is the safe haven in Europe? Is it Switzerland? Is it the UK? Where should I be looking if I want to hide out?
It's funny that you should take those two markets. I take no credit for it, but my illustrious employer did indeed decide to promote investing in both Switzerland and in the UK a few months ago. And I would certainly suggest that the greater stability politically in the UK, certainly compared to what we've had in recent history in the UK, is very encouraging. And compared with some other European countries which are going through some moves at the moment, that certainly makes it a more attractive place for investment. Switzerland had its general election last year, nobody noticed, and that is again typical of Switzerland. It is a country which has a very strong, stable economy, which has a clear understanding between the electorate and the government as to how to run the country. We have ample opportunities to express ourselves with direct democracy, and you can see the results of that with the strong Swiss franc, fortunately weaker, with a central bank which intervenes when it has to weaken the Swiss franc to maintain outwardly looking liberal economy, and which may well benefit on this week from this move perhaps to more caution. When we see healthcare going up, one needs to remember that Switzerland has a 35% exposure to healthcare stocks. So I would definitely see the safe haven nature of Switzerland being attractive once again to investors, and also the quality of the companies which do strive to be very value creative, which have particularly high cash flow returns on investment, similar to what you find in the US, but currently at a more attractive valuation than what you'd have in the US. So we are definitely attracted to the Swiss equity market in difficult political environments and also more fragile economic environments elsewhere.
Okay. One of the things that people have been doing over the last few months is maybe hiding out in high-tech companies. You can talk about the AI trade, but the ability of many portfolio managers to park their money into high-tech stocks and sit on the gains has been quite impressive. There is this idea now that we're going to see a broadening of the market, that small caps are going to bounce, that the rest of the S&P is going to do well. Is that broadly good or bad at an index level, do you think? Because it was interesting Friday to see actually US stocks struggling as this broadening happened.
So how one broadens is perhaps the question one needs to ask. And I think one needs to remember also that broadening is going to take quite some time in view of the concentration that you have on a couple of names currently. So yes, if you look at indices, if you want to consider indices to be a reflection of the economy of a country and the reflection of the economic power of a country, it's better to have a broad index than to have it overly concentrated in a few names. But an index also reflects what's happening. There has been a tremendous amount of quite well placed, I would argue, optimism about the opportunities around AI. But perhaps so far as we haven't yet seen how exactly AI is going to change or influence or adapt the ways that we interact with each other and become productive, we're seeing that trade be very concentrated on a few names. And that does mean that we need to be quite patient and wait to see how AI really develops and how it does influence us and where exactly the winners in the whole value chain of AI are going to be found. I would prefer to be already positioned into some areas which are already being affected by AI, be it on the side of the people who are helping to provide the enormous amount of energy we need to develop AI more thoroughly, be it in the first users of AI. And that does mean that bit by bit, we are going to see broadening, but with the size of the companies which are exposed to AI first and foremost today, we're going to see that broadening be quite slow and perhaps a little bit lumpy, as it may result in there being less performance on those very large market capitalizations, very big weights in the index, while smaller companies start to perform better. But overall, that means that the index might be under a little bit of pressure. Good argument, actually, for fundamental investing and avoiding indexed products, which may reflect more painfully the switch towards the broadening of the index.
Eleanor, what are you watching out for this week that could be most consequential to stocks? Guy was asking one of our colleagues, Paul Dobson, this earlier. We've got these Trump trades that are no doubt going to be in focus at the start of the week. We've got bank earnings. We've got Powell speaking later today. What do you think is going to be most material?
I would say that earnings should always be first and foremost in the minds of an equity investor. That is really where you're going to see the operational ability of the management of a company, and the rest is noise. And if you are a fundamental investor, you're not thinking about what is going to matter for 1 week. You're planning already what's going to be mattering in the beginning of 2025 and beyond that at this stage in the year. So earnings will be in focus. Obviously, when we have a lot of financial earnings, that's a very good indicator of how the broader economy is also functioning. And then there'll be noise that people who are probably more clever than I am or more short-termist than I am will be able to play with. But we've still got a very long time until we actually have the results in November for the election. So I'd be cautious about thinking that it's a slam dunk at this stage, especially as you've got a lot of noise around that. And certainly when it comes to the rates situation, I think we're all coming to the realization, or have over the last few months, that that inflation is going to be a lot more sticky, and that does give a little bit less flexibility to Mr. Powell. I would argue that the market is getting comfortable with that situation, and we should, I wouldn't expect there to be an enormous amount of noise or movement around what we might hear from the Fed this week.
Thanks very much, Eleanor. Good to speak to you. Eleanor Taylor-Johnson, fund manager and co-head of Swiss and Global Equity at UBP. Let's go to some of the European names on the move this morning then, Guy.
So some really interesting stories developing. The luxury story absolutely front and centre, I think, for European markets this morning. We've seen the double effect of Swatch and Burberry and the numbers they both delivered having a big impact. And as you can see, LVMH is down this morning. We'll come back to Ferrari maybe in just a moment. Luxury is where the negative story is. It does seem as if maybe the market is hiding out in maybe Novo Nordisk this morning, ASML. So the tech story is still absolutely front and centre. But it's interesting to see Schneider's a little bit soft as well. This is the board that you actually really want to pay attention to for European equities this morning. Look at the bottom. Swatch down by, let's call it circa 10%. Burberry down by circa 10%. The rest of the sector being really quite impacted by what we're seeing from these two companies. Plus, you fold in the China narrative this morning as well, Anna.
Yes, and we've got another couple of, one stock and a sector that we're watching in relation to news flow. Ocado shares in particular weak, halted for volatility, Guy, as you mentioned. We're looking into whether we've seen a broker downgrade on that one. In terms of the wind energy businesses, then, this is where the Trump trade comes into play. And this was a sector, of course, that many of our colleagues were expecting to see some reaction as we start to assess that Trump's chances improve. Ørsted, Vestas, both of these wind players, and seen as having less potential in the United States if we do get a Trump presidency.
In South Korea, you got a move into defence stocks. So you saw that in South Korea on the back of what was happening out of the US. You're seeing a little bit of a modest move in Europe on the back of that narrative, though. It's a bit of a bit mixed picture. Looking at Safran is currently down. But Rheinmetall is getting a bid. Of course, the German manufacturer of arms, supplying many of the European nations there in terms of weaponry, up 0.7%. So you're seeing a little bit of a lift for defence stocks. We can flip the board and have a look at healthcare systems or healthcare stocks as well, I should say, because there is also that bet that maybe a Trump presidency, again, with the caveat that if it comes to pass, would be less inclined to push hard on regulation. So you're seeing a bit of a lift for some of the healthcare makers. Zealand Pharma at the top of the list across that sector, up 1.3%. Also gains coming through for the likes of Merck and Novonesis, also gaining. Novartis, Roche also posting gains of around 0.3% to around 1% at the top end for Zealand Pharma.
So the Bernstein downgrade on Ocado does seem to be having quite a big effect. Double downgrade, price target cut to 260 versus 1,000. So massive downgrade coming through from Bernstein on Ocado. I've yet to see the note, but that's the headline coming from it.
Yeah.
And that's
so no surprise there's a big move there then?
Absolutely not. Luxury front and centre, though. It's a tough morning. It was going to be a tough morning with the China data. already, I think, for the luxury sector.
Yes, and then to get this news out of Burberry and Swatch, as you say, citing China as an area of weakness. It does seem that Burberry, though, has its own problems specific to the business as well as the broader read across. But, you know, with the CEO only in post for 2.5 years, really tried to invent themselves, move up that luxury curve, but not sticking.
Yeah, and the lineup that came through from Ackroyd didn't win as many plaudits as many, arguably, within Burberry would have wanted. So you're right to point out this is partly an idiosyncratic story to Burberry, tied into the broader sector pressure coming through from China. And as we discussed, China doesn't turn around in terms of consumer sentiment until the property crisis is resolved, and we seem to be a long way from that. So we keep across, of course, what is happening on the Burberry story. Guy, we're going to get in more on that after the break. You are a regular visitor to Burberry stores
I've been there once.
Mayfair.
Tom continues to reference this.
Yeah.
Daniel Lee, I wonder what future he has at the company, given the fact that we've just seen a change in CEO. Does the chief designer, who, as you say, has struggled a little bit, maybe to gain traction? Anyway, we'll talk more about this in just a moment. We need to get you up to speed with what's happening here in a little bit more detail. CEO's gone at Burberry. We've got a suspended dividend there. We've got the Swatch story you need to factor in as well. More details to follow in a moment. This is Bloomberg.
Welcome back now. Swiss watchmaker Swatch Group's shares are down, taking a big hit in the session, down 10% as things stand, after reporting profits plunging 70% amid a China-led slowdown for luxury companies. Let's get more with Bloomberg's Chloe Melly then on the details. Swatch, but also Burberry. We'll start with Swatch then, taking a big hit, and so much of this seems to be down to the China story. Talk us through the numbers.
Yes, so as you said, 70% drop in operating profit, sales plummeted as well. And the thing is, those two profit metrics, the profit and sales, that came significantly below expectations. That was really not something that was anticipated, led by a downturn in China. So the CEO said the company had cut production by more than 20%. And he said that China will remain weak. The Chinese market will remain quite weak until the end of the year. It'll be interesting to see what Richemont does tomorrow in terms of its watches segment as well. The jewelry segment is quite resilient, but maybe it seems like the watches sector in general in China is struggling a little bit.
So not buying watches. Is there a similar story at Burberry, or is this very much more idiosyncratic around what they've been trying to do to move their business sort of up the luxury scale?
Yes, Burberry is a bit more specific to them. So they've been really trying to have this brand revival strategy to become more of a high-end label. And that has really not worked so far. They've changed their CEO and their chief creative officer in the last 2.5 years. And what they've been trying to do has not really, it's not there yet. And there have been reports of jobs potentially being on the line as well, as it's still navigating this turnaround. But we'll have to see about that. But there's some expectation that the second half could be a little bit better. The comparatives will be easier, and a bit more tourism could be quite beneficial. So we'll have to see on that.
Chloe, we'll leave it there. Thank you very much
Thank you so
indeed.
much.
It's Chloe Melly joining us on what is happening with the luxury sector, which actually in some ways takes us to what we're going to be talking about next, which is tourism.
Consumer spending certainly does, doesn't
Precisely.
it?
Yeah. You talk to the airlines, summer's going okay, but there are cracks beginning to appear. And there's quite a lot of capacity being put into the market as well. They've been constrained by Airbus and Boeing, but nevertheless, it's going to be a really interesting summer. And I think the winter season is going to be fascinating for these airlines to see how they do through that. Is consumer demand, looking at the luxury sector, starting to fade a little bit?
We will certainly get into a conversation about that then. Coming up, tourists are set to spend a record amount in Europe this year, we understand, as travel demand remains strong. But that comes with its own challenges. We will discuss how airlines are coping with the CEO of Sun Express, a joint venture between Lufthansa and Turkish Airlines. We'll see how much he agrees then with that expectation of strength, as Guy was pointing out some signs of weakness, some cracks appearing in the aviation story. That interview next. This is Bloomberg. Welcome back. This is the opening trade, 30 minutes into today's session for this Monday morning. And Tom, European equity markets then on the back foot. The Paris market in particular down by 0.8% as it underperforms the luxury sector writ large there.
Yeah, and in those luxury names, it's really the focus on Swatch and Burberry. As we've been discussing, both of those companies down double digits, down more than 10% right now, both Burberry and Swatch. Swatch with the focus, of course, on China and the softness they're seeing in terms of sales there, not seeing any rapid turnaround in terms of the demand out of China. Burberry cancelling and suspending its dividend and also changing its CEO, but also facing a challenge in terms of the demand or lack of demand out of China as well. So Burberry and Swatch, the biggest losers across the European space. Ocado also taking a big hit of close to 9% on a downgrade coming through from Bernstein. So we continue to keep across what's happening with Ocado. In terms of the resilience that's coming through, or at least relative resilience across European equities, you're seeing a little bit of strength coming through for the likes of healthcare and defence, and you can tie that maybe to the Trump attempted assassination story and what that means for his chances come November as well. So we keep across those sectors for you. Across the benchmark, European stock 600 currently down 0.4%. But Anna was saying the underperformance coming through from the CAC current over in France, down 0.8%.
Tom, let's kind of draw a line between what is happening in the luxury space and what's happening with the travel space. In many ways, those two sectors very connected. So the summer season is underway, the vacation season in full swing across Europe, and demand for now remains strong. Travellers, however, are facing long delays, flight cancellations. That seems to be a big theme. Airlines are dealing with rising costs. Joining us now is Max Konarski. He is the CEO of SunExpress. SunExpress is a 50-50 JV, joint venture between Lufthansa and Turkish Airlines. Max, thanks for the time. What does demand look like right now? We're starting to see in other spaces signs of the consumer cracking. Is that starting to show up in demand this summer?
Actually, on our end, not at all. We've seen very strong demand in all markets we've had. SunExpress itself, in terms of the pre-pandemic levels, we've already broken that in 2021 at 101% capacity. Last year, we were already at 146%. This year, we're shooting over 170%. So in terms of, many European mainline carriers being between 90 and 100% capacity to pre-pandemic levels, we've exceeded that very well. For 2024, we're seeing seat capacity increases of over 19%, and we're shooting for 15 million passenger numbers. So we're very happy with the demand we're seeing right now.
Max, can I just talk to you about a sort of related issue, which is very strong demand, but struggling infrastructure, and airlines that are struggling with cost issues as well. Let's deal with the infrastructure issue first of all. How big a problem do we have in Europe with ATC, air traffic control? I have to say, personally, I've just spent the last few days dealing with this, significant delays, cancellations across Europe. Are we underfunding air traffic control? Are we underfunding the infrastructure? Do you think airlines need to pay more?
Well, we've seen cost increases on the ATC side and actually any supplier side to a degree that we can't pass on to the customer. We're looking at low single-digit yield increases compared to our passengers, and we're looking at double-digit cost increases all around our supplier landscape, whether it's ATC, whether it's fees and charges, whether it's other supplier costs. So airlines are sort of stuck in the middle on that one. So definitely a no to increasing fees on that front. We are seeing bottlenecks and congestions. Actually, all around Europe, this is a tendency that all airlines are affected by, and we're working through it. For example, at SunExpress, we have started a mobile sort of emergency SWAT team that is certified to help in all different kinds of airports with different security clearances. We have stepped up our communication efforts, and this is something we have to go through all together to master this summer traffic peak.
OK, so that's the infrastructure and how it holds up to the summer peak. Thinking about that summer peak and what it starts to look like in the years ahead, Max, I wonder if you could give us some insight into conversations you're having or what customers are saying about rising temperatures in Europe and how that might change travel plans. Clearly, you're painting a picture of resilience. 2024 seats up by more than 19%, you said. But what conversations are going on around how rising temperatures impact if people travel, but perhaps more when they travel?
So we're seeing two things. For the summer peak, it can't seem to be hot enough for our travelers. So again, as you said, 19% seat capacity up. We're seeing that over the last really decades, especially Turkey as one of our key destinations has grown by 10 to 12% every year in the last 30 years and is still rising. The good value for money is actually helping on that front. So we're not seeing any kind of decline in demand for the summer. But what we are seeing is that in terms of just sun and beach, our customer segment is diversifying and expanding, and we're seeing that the shoulder periods in the early spring, but also the late fall, are actually extending. And we're looking at aircraft and crew utilizations of over 90% for the months of October, November. This is a new development, and not sure this is purely driven by the climate developments, but more importantly by, I think, customers really being eager to also get some relaxation time in later in the year.
That's interesting. Max, thinking about your growth plans, obviously that relies on you being able to get hold of the aircraft that you want and the ones you have on order. So you have an order in for 737s, I understand, and yet we've seen delivery delays there. How is that impacting on your expectations?
Yeah, at Flight Express, we have actually 2 open orders, one for 42 aircraft and another one for 90, so 132 in total. We're very happy with the aircraft from a technical point of view. We're very unhappy with the, as you mentioned, the delivery delay situation by Boeing. And we are putting quite a bit of pressure and also ample negotiations to step up the accuracy and the delivery timelines. This is something we're in discussions with Boeing. And again, this is something where Boeing really needs to step up its game in terms of getting back to the original delivery timelines. For us as a seasonal carrier, especially pre-summer deliveries are incredibly important. Delaying an aircraft by 6-7 months post-summer is a big hit for us with high costs. And again, this is something that is hard to pass through to the customer. So again, airline as an intermediary is stuck in the middle.
Max, what does that pressure on Boeing look like in a kind of material sense? Is there any adjustment around the contracts that you have with them on these 130 plus aircraft that you've got on order in terms of pricing? Is there anything more material you can do in terms of that pressure? And when do you see deliveries getting back and kind of normalising? What's that time frame for you?
Well, I think you'll understand that I won't disclose any details in terms of our contractual negotiations with Boeing. But obviously, I think it's, we have out of the 90 aircraft order that we had in last year, we have 45 firm orders, 5 options, and 40 purchase rights. And obviously, that gives us a bit of space to negotiate, turning those into firm orders or not. And that's an area, an angle of attack that we're using.
Do you think you ever get those 737-10 MAX 10s, or you have to kind of effectively, and in reality, kind of write those off?
We're not going to write it off, actually, and we desperately need that aircraft because, as you know, the 737 MAX 8, roughly 189 seats to the MAX 10, 230 seats, is something we badly need in terms of the increase in capacity, and we're seeing it with other airlines too, the upgauging that is badly needed. The MAX 10 hasn't been certified yet, so this is a process that's still going on. Boeing is advising that this is going to happen in 2025. Our earliest MAX 10 delivery is in 27, so we feel well prepared in still phasing that in on time.
Max, there is a shortage of aircraft around at the moment. What is happening with Boeing is one issue. If you're an Airbus customer and you've got the Pratt engine, you've got a problem as well. So there are kind of multiple issues that are affecting capacity this summer. Nevertheless, Turkish carriers in particular are putting a lot of capacity into the market. How do you think that's going to work out? Do you think there is too much capacity coming in for Turkish carriers? And how do you think that could ultimately affect your yield levels?
Actually, not at all. Our yields have gone up, again, single digits instead of the cost increases we're seeing that are in the double-digit range. But as you said, Turkey has had a wonderful growth spur. Actually, not only just the last few years. I mentioned we're operating at over 170% capacity compared to 2019. But if you look back, even for the last 30 years, you're seeing growth rates anywhere between 10 and 12% CAGR over the last 30 years. And this is despite, natural disasters like the earthquake last year, the military coup attempt in 2016. It's a very stable market. The current situation in terms of the economy is also providing a very good value for money and sort of benefit ratio in Turkey, which has made Turkey the #1 leisure destination out of mainland Europe, for example, at the moment. So I'm not concerned about that. Again, it's the sort of meeting demand with supply available we have.
OK, final question. We started the conversation talking about demand. You say that demand is very strong and is likely to remain, certainly in the near term. You are a seasonal carrier, mainly focused on the summer. So what happens this winter? What do you think? How sustainable do you think the current demand picture really looks like? I'm starting to see airlines sounding much more cautious about what this winter season is going to look like. Do you think this is the last summer in which we're going to see this level of demand, this level of price elasticity? How much more can we get out of this market, do you think, into next summer, into what happens in 2025?
As I mentioned before, we're doing a couple different things to counter seasonality. One of the things is that we're extending the summer period. And as I mentioned, we have crew and aircraft utilizations in the 90% plus range in the months of November and October. So it is diversifying the purpose of travel from purely sun and beach to, culinary travel, cultural travel, hiking, nature travel. And that's worked quite well. Golfing tourism, for example, has spiked up, especially from the UK. And so we're seeing a demand that is sort of broadening into spring and also into the fall. So on that note, very, very positive developments. At the same time, we're also taking actions to shed some of the capacity in the wintertime. One example here I'd like to mention is our operation in South Africa. So we have, last winter, we put 2 aircraft into South Africa, operating for South African Airways between Joburg, Cape Town, Durban, Port Elizabeth, and this is being stepped up next winter. So we're doing things on both sides. One, basically increase revenue, counter seasonality, and at the same time offloading and shedding some of the excess capacity we have in the wintertime.
Max, great to catch up. Thanks for spending the time with us this morning. Really useful update on what is happening. Max Kowalski, CEO of Sun Express, which is JV between Lufthansa and Turkish Airlines. Let's get back and talk about some of the other stories we're watching so carefully this morning. A big week for US bank earnings. We saw, obviously, the story Friday. Today we get Goldman Sachs. It's going to report numbers a little bit later on. We'll have a preview of that. That's going to be important. We're also, of course, going to keep eyes on Milwaukee. President Trump is going to is changing his speech, we understand, to get ready to speak at the Republican National Convention. This obviously following the attempt on his life over the weekend. How does that change the narrative? You're looking at live pictures from the RNC. This is Bloomberg.
Welcome back to the opening trade. Markets increasingly thinking about what's been going on in US politics over the last few days, of course. Last week, we spent a lot of time talking about the Democratic camp. This week, no doubt, the focus on the Republicans with the RNC taking place and what happened over the weekend to former President Trump. Let's think about the wider global context here. World leaders have been quick to condemn political violence and wish Donald Trump a speedy recovery after the shooting of the former president over the weekend. Let's get more on the international response to the attempted assassination from Bloomberg's Oliver Crook, who has those details for us. Ollie, take us through some of the reaction then that we've seen from world leaders.
A lot of it has been condolences, has been sort of sympathy, but really the overarching messages from most of the leaders across the world is that violence is not the solution to political problems. And this is what we heard from leader after leader the moments after and the hours after the attempted assassination of Donald Trump. You had Olaf Scholz, for example, out on X saying that the attack on the presidential candidate Donald Trump is despicable. Such acts of violence threaten democracy. Of course, there are certain nations that we look at for a slightly more closely in terms of what their responses was. China, for example, gave a very sort sort of sober message saying that they expressed their sort of sympathy and their concern around the shooting incident. There have been, of course, some more colorful reactions, say from the Kremlin, where we heard from the spokesman there, Peskov, saying that after numerous attempts to remove candidate Trump from the political arena, using first legal tools of the courts, prosecutors, attempts to publicly discredit, etc., it was obvious to all outside observers that his life was in danger. He did go on to say that Russia does not believe the attempt to eliminate Donald Trump was from the current administration, i.e. from Biden, but you got some of the flavor there from Russia. So, of course, you take that with the grain of salt that you would expect to take a message from Russia from. However, you had some of those sentiments also echoed by other leaders across the world, like Javier Milei, who was basically putting all of the blame on the sort of global leftists and sort of this is their sort of last attempt to sort of clutch to power. You had Nigel Farage over the weekend saying that the way that the liberals, so-called, had been characterizing Trump sort of invite this sort of activity. You had similar comments from Geert Wilders. So really quickly to sort of politicize this. And of course, for global leaders, this is a hugely important moment here. And if you have instability in America, when it is party to two major wars, it is a big deal. But of course, it will also bear on who is sitting across from them at the table come January.
Yeah, and those comments coming from Wilders and Farage and Milei coming before, of course, we have any idea what the motivation was behind this attempted assassination, what the motivation of the shooter actually was. In terms of the broader political context, Ollie, you sit there, of course, in Germany. Germany facing its own far-right threat, some would see, in terms of the AfD. That's how some would characterise it, but also the threat of violence as well. It's not just unique to the US. This is happening in Germany, in other parts of Europe as well.
Yeah, that's right. In Slovakia, of course, the prime minister was shot just 2 months ago. So this is really something that is present in the minds of many democracies across the world. But as you say, Tom, certainly in Germany, where you saw in the lead up to the EU elections, a number of acts of violence on political candidates and organizers throughout Germany. And you see it there on the screen. There were 60,000 last year offenses, politically motivated crimes. That's the highest since they started sort of following this kind of data in this kind of detail since 2001. And that is a mark of almost doubling over the last 10 years, and it's really sort of escalated as well in the wake of the Israel and Hamas conflict. And it's important, Tom, because we also have state elections here in Germany in September across 3 states where the AfD, the AfD, which, as you say, for many mainstream politicians is a source of great concern, is expected to sweep across all of those elections. So that tension is very felt here in the atmosphere in Germany.
OK, that's a remarkable statistic, isn't it? Oliver Crook, thank you very much in Berlin. Just on the numbers out of Germany in terms of political linked violence that we've seen just in that one nation.
Yeah, absolutely. So, Oliver, there with some of the deep dive into Germany, I was taken back to the events pre the Brexit referendum here in the UK, where we saw the murder of Joe Cox, the MP. And at that time, and that came just a week before the vote, and at that time, lots of people said, well, is this going to give energy to the Remain camp? And actually, well, we will never know what the counterfactual would have been, but certainly we didn't see that come to pass. The Remain was not victorious at the polls, 52-48. We voted for Brexit. It just goes to show how unpredictable the impact of these things can be.
It is really hard to predict, and it's also hard to predict how politicians are going to react to this as well. Does this bring the politicians back towards the centre, or does it only entrench the extremes? We're going to find out a little bit later on, maybe with Donald Trump, when he speaks, and we'll see exactly how he navigates this really difficult story from his point of view, from his personal point of view, and from a US political point of view. This is one of the narratives we're going to be watching so carefully this week. It's a big week. We've got the Powell interview coming up a little bit later on with David Rubenstein. We've also got the continuation of bank earnings that we need to factor into our thinking as well. The earnings season absolutely front and centre. Morgan Stanley, Bank of America, Goldman Sachs, all yet to report. Of course, we saw what happened with JP Morgan, Citigroup, Wells on Friday. The big market reaction. We got to some OK numbers from some of those banks, from the mixed numbers from others, but the market generally took it fairly negatively. So does that narrative change this Monday? Jenny Serrain joins us now to discuss. So we've got Goldman Sachs front and centre. The message coming out in terms of investment banking from the others that we've already had, JP Morgan, etc., not that great. What does that tell us about maybe what we should expect from GS?
Yeah, I mean, I think that's exactly right. So it was interesting on Friday because all 3 of these banks actually posted really strong numbers in investment banking, with debt capital markets being one of the particular areas of strength. But you heard both the CFOs of JP Morgan and Citigroup both saying, you know, this is kind of a weird number for us because in a lot of ways this was companies looking to get ahead of a big wall of refinancing that's coming up. And so they just pulled forward activity that we were expecting them to do in the second half. And so while obviously this quarter's number looks great, rate, we're not actually sure that this is going to make it through the end of the year. And so I think that will be the type of flavor that we're looking for from David Solomon and his other executives today. You know, even if they post really good numbers, how permanent do they feel like this is? Are these real green shoots, or is this just kind of a you know, incidental blip, and we're kind of back to the doldrums that we've been seeing these past few quarters?
Well, does that apply as well, that prism, to trading activity as well across these banks?
Yeah, it was interesting on Friday. You know, none of them really had kind of standout quarters in trading. The ones where we saw it, like Citigroup, I think their equities numbers looked really good, but it actually had some weird one-time gains. And so I think it wasn't much to kind of call home about in trading this quarter. And really all the focus was on investment banking. Now, again, that is something that a lot of these executives warned isn't going to continue through the second half. And then they also were quick to point out that this is off of a really low base. And so this doldrums that we've been talking about, this deal-making slump, the capital markets just being completely sleepy, you know, that's been the kind of backdrop that they've had. And so we haven't really seen them turn it around quite yet.
It seemed, Jenny, that banks got a boost, didn't they, as central banks were hiking interest rates, and we saw that being passed through. Net interest margins were flattered by that. Some people asking now whether we enter a period where the politics means we get steepeners in bond markets, and some saying that the banks will benefit from that. So we've got the earnings story to factor in, but then we've got that other trajectory to keep an eye on as well.
Yeah, you know, it'll be really interesting because I think for the most part, a lot of them were talking about kind of the end of the heyday of high interest rates for them. And so, yeah, net interest margins, net interest income have both been on a real tear these past few years, really. And we're starting to see that really come to the end. But it'll be interesting because I think, you know, obviously there's still a lot of questions about when the Fed finally does cut rates or how quickly that happens. And so I think for the most part, they're still trying to sop up whatever benefit they can in the meantime.
OK, Jenny, thanks very much. Bloomberg's Jenny Serrain with the latest on the banking sector. Looking back a little on to Friday's roster of reports and ahead to Goldman Sachs and other earnings. Thinking about the week ahead, we have earnings reports coming more from the luxury sector, in fact. We've heard from Burberry already this morning, and that didn't go well. That's weighing on the sector. Weighing on the CAC 40 as well, which is down by 0.6% this morning. So we'll keep an eye on the earnings. ASML will be reporting middle of the week as well. The UK's King's Speech, that's when the Labour Party sets out its legislative agenda for the year ahead. So that will be an area of focus. And then on Thursday, we'll get to the ECB. We wonder whether that can cut through some of the other dynamics that markets are dealing with right now. And we end with Netflix earnings at the end of the week.
A sort of finale. I've got some sort of joke around Netflix.
Yes.
I'm not entirely sure what it is.
Excellent. Write your own.
Yeah, exactly.
Insert here.
You can binge watch all of it. Let's talk about what we've got coming up, though. This Powell interview, I think, is going to be fascinating. I really do. He's going to be talking to David Rubenstein, peer-to-peer, obviously the Carlyle founder. David has a real kind of rapport with Powell, which I think is going to be fascinating to see kind of how much he gets out of him. But what does Powell say? What does he do at this point? You've had some quite good data. He feels like he wants to be dovish continuously. Does that continue to come out today?
Yeah, is he coming at this with a message? As you say, as you made the point earlier, David's very, very good at asking those questions in a very calm way that extracts sometimes unusual and surprising comments. So we'll see if Jay Powell plays ball. If he comes to this with a message, does he push back on some of the market pricing, currently pricing in a little over 2 additional cuts, or 2 cuts, I should say, by the end of this year?
We spoke to Paul Dobson earlier. I thought you asked him this interesting question about what's going to be the big market story. Is it going to be what Powell has to say? Is it the Trump trades that we're seeing in focus and much talked about today? Or there are all the earnings stories out of the banking sector. He was saying that they might all point in the same direction. So he was leaning very much in the direction of that slightly more dovish Powell that gives a little bit more oxygen to that.
Is Powell's position questionable? I mean, post-November, if Trump wins as well.
Precisely, that's another factor you've got to factor into the thinking. How does that narrative change? TSMC's out with numbers on Friday. Keep an eye on what's happening with the Nvidia trade as well, when you think about what kind of message it is going to communicate.
And AI and all its forms. That is it for the opening trade this morning. We leave you with equity markets in Europe that are selling off, down by 0.3% on the Stoxx 600. Some real underperformance coming through in Spain. Good weekend for Spanish sport, not good for Spanish stocks this morning, it would seem. The Pulse is up next. This is Bloomberg.